What's up, guys? It is Friday, March 28th, 2025. And as you can see here, we're at the Bitcoin block height of 889,861. TikTok, next block. Hope you guys are enjoying your beginning of your weekend. Real quick, guys, join me live today at 4 o'clock Pacific, 7 o'clock Eastern. I'll be doing a live then, and I will also be giving out some free Satoshis in a couple of different ways. Because I want us to learn stuff, but I also want us to earn in Satoshis. And Satoshis are very, very valuable, obviously. And what I'll be doing a spin of this wheel every time a block comes out, and I'll be giving out free Satoshis. And also, I'll be asking questions to you guys. And whoever answers the question first will earn Satoshis. And we'll have a lot of fun. We'll talk about what's going on in the news, and we'll look at some numbers, and we'll figure out what's going on in this Bitcoin space. And also, this is a good way to study, to learn, and earn. So hope to see you there at 4 o'clock Pacific, 7 o'clock Eastern time. All right, so I'm going to react to Matthew Cratter's video today. Why is Bitcoin performing so poorly? I have not seen this yet. I'm not going to show the whole video. I'm gonna react to it. Then I'm gonna edit out some parts because I don't want to take anybody's content, and I want you guys to watch it yourself and form your own opinions. Hit the like button. Hit the like button here too. So without further ado, let's listen to the great Matthew Cratter and see why Bitcoin is performing so poorly.
This is Matthew Cratter's Bitcoin University. Today I want to answer the question, why is Bitcoin performing so poorly? The Bitcoin network itself is functioning beautifully. Fees are low, transactions are not being censored, the consensus rules are being enforced. So life is pretty good. Everything is great actually, except for Bitcoin's fiat price, especially measured against its greatest and perhaps really only competitor, which is the US dollar. Now, the Bitcoin 4-year cycle traditionally...
Well, I think gold is a competitor too. But as far as a medium exchange, a dollar is definitely a competitor, but a store of value, it's gold we have to surpass. But he's absolutely right about the fundamentals of Bitcoin. Everything's great. Hash power's up. The network's running good. Nothing's changed except when people look at the fiat price, that's what they measure it by. But again, when you study and understand and learn about Bitcoin, you know that the fundamentals are working just fine.
With the halving, the most recent of which was April of 2024. And we can see here a mapping of the different halvings on top of each other. So we've had 4 of them since Bitcoin's inception. We had a halving of the Bitcoin mining block subsidy in 2012, in 2016, in 2020, and most recently, as I said, in April of 2024. So based on this mapping, we can see here the top purple line, this is 2012. The green line is 2016, the blue line is 2020, and the black line down here is the shifted version of the current cycle. And we can see for 341 days after the halving, which is when I'm recording this video, Bitcoin's price has severely underperformed all previous cycles and halvings. And if we scale the current halving and where the price should be relative to previous cycles, if we scale the 2012 price at this point, 341 days after the 2012 halving, we should be trading at $1.1 million per Bitcoin. The 2016 scaled price should be $235,000 per Bitcoin, and the 2020 scaled price should be $418,000 per Bitcoin. So we're massively underperforming, as you can tell.
Wow. Long story short, Bitcoin's at a discount. Satoshis are on sale right now. You know what I mean? I mean, look at that. 2012, if it was scaled using that, it'd be 1.1 million, which is the highest degree. Again, it's not going to do that because that was the first epoch. In the second, third epoch, it was 235,000 if we go by that, how the scale went then. And then in 2020, if we went by what it went up to then, it'd be at $418,000. And right now we're sitting at, $86,000, and you can get almost 1,200 Satoshis for $1. So the moral of the story, guys, is Satoshis are on sale. I mean, that's just the bottom line. And we got to take advantage of this, man. Again, join my live so you can get some free Satoshis, but it's incredible, man. This to me is an absolute gift. I can talk about this for 30 minutes, but man, I just get so happy when you're in the accumulation phase, because I am, again, for 10 years, we're going to be doing this, stacking until 2035 for the gold rush. This is incredible, man. This sale, it's basically at the worst case scenario at 235,000 at the 216 scale. How much of a discount is that? 75% off or something like that? Quick math. Crazy, man. Incredible.
And even if you were expecting diminishing returns for each subsequent Bitcoin 4-year cycle, this cycle's price action since the April 2024 halving has been especially disappointing, as we saw from that chart. So, what are some possible explanations? That's what I wanted to explore today. Explanation number one, possible explanation number one: Bitcoin's fiat price is being dragged down by macro factors, including global uncertainty over the Trump tariffs and geopolitical realignments. Everything's being thrown into question, whether European countries are US allies, what's going to happen with Asia, what's going to happen all over the world. And then there are also Trump and Elon's efforts to shrink the US federal government and its spending through Doge, which, to be clear, I do support 110%, but we're going to talk about its impact on GDP in a moment. So, as part of the Doge cost cutting at the federal government level, this leads obviously to less US government spending. We'll see how much ultimately is saved. But the more you lower US government spending, because US GDP, one of the components is US government spending, which is kind of stupid, but this does mean that we could see US GDP shrink. And when US GDP shrinks for 2 quarters, that's classified as a recession. So that may be starting to get priced in for risk.
Except for 2022 when they changed the rules or they changed the definition during the Biden administration. Remember that? Two negative GDPs, third quarter and fourth quarter of 2022. They just changed it.
Risk assets like stocks and Bitcoin. That may be why Bitcoin's price has been so weak over the past 12 months. Risk off assets, anything that goes up or stays level during a financial crisis or recession. This has traditionally been US Treasuries as an asset class, as the ultimate safe asset class, but maybe not this time, especially given where government spending is and where debt to GDP is. There's some question about how the US is going to get out of its debt crisis. Now, Bitcoin itself is the ultimate risk off asset. It's a safe haven since it has zero counterparty risk and zero dilution risk, unlike any other asset out there. But the market doesn't understand this yet and still views Bitcoin as a risk on asset.
And that's where the opportunity is. No one understands this. So buy, learn, and get as many Satoshis as you can and learn about it as much as you can. Because again, nobody knows about it. If you're in the 0.01% of the planet that knows about this, again, these Satoshis, you got to look at them like dollars. You know what I mean? Get as many of these things as you can because again, your fair share is about 245,000 Satoshis if it's split up evenly, right? And it's not split up evenly. You know what I mean? So get as many of these things as you can, while nobody else knows about it. And then again, study as much as you can to understand it. Because people think that risk off assets in today's world is the 10-year bonds and stuff like that. That's what Trump's plan is, to get these people into that so that the bond yield can go down, and then the Fed is forced to drop the interest rates. That's the plan. And while they're getting into bonds, we're getting into Bitcoin.
Now, Bitcoin itself is the ultimate risk off asset. It's a safe haven since it has zero counterparty risk and zero dilution risk, unlike any other asset out there. But the market doesn't understand this yet and still views Bitcoin as a risk on asset, and hence this correlation with other risk on assets or risk assets like stocks. And this is why over the years, on and off, Bitcoin has often been correlated with risk assets like the NASDAQ, the QQQs, or the NASDAQ comp. And the NASDAQ has been selling off for the past month or so, at least partially in response to Trump's new America First investment policy. I'll put a link to this in the description notes below. Explanation number two: Wall Street banks, corporations like MicroStrategy, now known as Strategy, and even nation states have been buying Bitcoin, but they've been met by selling pressure from individuals. Are these whales cashing out after 10 years to buy the requisite mansion or yacht or airplane or something like that? Or are these just paper-handed retail investors taking profits? There's probably some of both. If we take a look at 2024, this report from River was quite interesting. 2024 change in Bitcoin ownership. We have funds and ETFs, mainly the BlackRock Spot Bitcoin ETF, and businesses as well, mainly Strategy, obviously. We have funds, ETFs, and businesses buying nearly 900,000 Bitcoin. And then we have individuals selling off 525,000 Bitcoin. This other category, it says changes in Bitcoin to be mined, Bitcoin held in smart contracts, and estimated Bitcoin lost as well as governments selling off 62,000 Bitcoin. So basically, it looks like individuals mostly have been selling to funds and corporations, which is great for those funds and corporations, but it's not great for those individuals giving up on those potential returns.
And this is what I'm worried about right here. The individuals selling the Bitcoin to the governments, corporations, and everything else, right? We own 69% of the Bitcoin right now. And we have to make sure we hold on to it. Make sure when you sell your Bitcoin, guys, don't sell it back to the exchanges. That's the bottom line. Because when you sell it to the exchanges, guess who's going to pick it up? Again, the governments, the big companies, the ETFs, and everything else. We want to keep it in a circular economy. If you want to sell some Bitcoin, come holler at me or somebody in my Discord group, right? I got a Signal Discord group called Bitcoiners for Freedom on Signal. You can check that out and join that. But again, there's a lot of different groups you can join up. But make sure when you sell your Bitcoin, do not sell it back to the exchanges. Make sure you sell it to another Bitcoiner.
And there's no rule that says that Bitcoin's 4-year cycle price action needs to always play out in the same way. We would expect diminishing returns, but there's no reason that the 4-year cycle has to continue, especially when the block subsidy has gotten so small. It's fallen from 50 Bitcoin per block to 3.125 Bitcoin per block. So there's an argument to be made that the halving matters less and less. The counter argument is it does matter as sort of a self-fulfilling prophecy. But there is no rule that says these 4-year cycles need to map out the same way. And there's no rule that says we even need to have 4-year cycles. We can have an extended bear market. We can have an extended bull market that even overlaps those 4 years. And the thing is, in markets, the more people expect a certain pattern, the higher the likelihood that that pattern will stop working and will no longer be tradable or investable. And this is why the profitability of trading systems decays over time. This was an area I used to be quite involved with, so I can tell you that this is true. There's no rule that says that every halving cycle has to play out exactly the same way as we said. And so my perspective here is that cheap sats is always a blessing. It's impossible to time Bitcoin. So you're going to be much better off if you simply keep dollar cost averaging, DCA, which means buying a fixed dollar amount every day, every week, every month, regardless of the price of Bitcoin, regardless of the fiat price of Bitcoin. You just DCA and get on with your life and do more important things, because really checking the price of Bitcoin many times a day, as I know many people do, and I'm guilty of this myself sometimes, checking the price of Bitcoin many times a day is about as rational as checking the price of your house on Zelle many times per day. It makes zero sense for a long-term investment, and it's probably just another sign of a dopamine addiction, which I may have as well, obviously. That's why I prefer to focus on Bitcoin's fundamentals, which do remain stellar. There's simply nothing else like Bitcoin in the world. There is no second best.
Yeah, there you have it. Go check out Matthew Cratter's channel, Bitcoin University, and make sure you watch that entire video. Again, I don't want to steal his content because I edited a lot of the stuff out. So, yeah, I agree. The first two, I agree, it's a combination of the first two things of why Bitcoin is down. I also agree with him of not checking the price all the time. Again, everybody's guilty of it. But the best way to do that, honestly, and if you want to, make sure you're getting all the ups and downs, I have a link down below, and you can buy every hour on the hour with Strike. And if you use my link, you get your first $500 of buys for free. I think it's the best way to buy, honestly. And Strike's fees are really, really low. And also, they have free DCA. So after the first week of dollar cost averaging, on the 8th day, you'll get no fees at all. So your first $500 are free. And then after that, you'll pay no fees at all. And you can buy every hour on the hour without checking the price. But yeah, there you have it. I agree with that. But honestly, the Bitcoin price is down. And again, it's a blessing. You know what I mean? We got to stack these sats as cheaply as we can. We're in the accumulation phase while we're going through the Bitcoin gold rush. And I just wanted to make sure that everybody understands that. And it's a blessing to be part of this accumulation phase and the Bitcoin gold rush. It really is. I think Bitcoin right now is like a spring that's coiled up, coiled up, coiled up. And then all of a sudden it's just going to explode. And it's going to explode quick. I really believe that. Well, all the stuff that's going on right now with the strategic Bitcoin reserve, the Bitcoin Act coming out, trying to buy more Bitcoin. All these big companies, the ETFs are gobbling them up. There's plebs that are buying them. We're all buying and not selling. I mean, come on, man. Again, is there a little bit of manipulation? Probably, yes. But who cares, right? The cheaper, the better. Because again, we're not even thinking about selling or looking at anything until January 2035 when the Bitcoin gold rush is over. That's when 99% of the Bitcoin is mined. And this is an incredible opportunity. So thank you guys so much for watching. Again, I got a live coming today at 4 o'clock Pacific, 7 o'clock Eastern. Get these Satoshis for free and join me, and hopefully I'll see you there. But again, at the end of the day, guys, this is why we Bitcoin right here. You see this national debt at 36.7 trillion almost dollars that we owe. As an individual citizen in the United States of America, we owe $107,000 a piece for doing nothing except for going to work, going by the rules, doing everything they tell us to do. And because the government decided to print money, we're in debt because of it as an individual. And again, there's no way we're going to get out of that debt in this broken system. Again, you see the Doge clock, they're doing great and everything else, but it's in a broken system. This is a broken system, and Doge is working within the broken system. So again, long term, they're not going to be able to lower that debt, because as you can see, as we're talking, even though the Doge clock is saving us 253 billion, the debt is still going up as we speak. And also, they're printing more money. That means the inflation rate is going to go up, meaning that your purchasing power of your dollar is going down, right? Because your dollars are your energy. It's simple as that. You're transferring your time at work for these inflated, debased dollars. And again, it's an unfair system. It's a broken system. And there's only one way to get out of that system and to pay off that national debt and to drop inflation. And if you've been paying attention, I'm pretty sure you guys already know what that is. It's the best way to save. And for me, the only way to save. And that's Bitcoin. I love each and every one of you, and I'll talk to you soon. Peace and love, guys.